Welcome once again to another episode of Market Views. It's me, Hilton, with Rufaro as usual. Today we're going to discuss about Bindura Nickel Corporation. I think this is the first time we've seen Bindura giving us full year financial results since it migrating from the Zimbabwe Stock Exchange to the Victoria Falls Exchange. And it's something we've been waiting for everyone to see if the move from ZSC to Bindura benefited them in any way. And also not forgetting what's been happening globally on the nickel prices. They shot up more than 1,000%, and we saw some exchanges actually closing down trading of nickel. So regarding that, Rufaro, is this what you expected to see in terms of Bindura results? Is it better? Is it good? Is it worse? How do you feel with the results?
Thank you very much, Hilton. I would say it's within the range of what we were expecting. So like you rightfully mentioned, nickel prices globally went up due to the crisis that was happening, is still happening in Ukraine. And you would expect a company like BNC then to have an increase in their top line. So the 25% increase in revenue is something that we were expecting. And also that move from the ZSE to the VFEX has advantages associated with it. One of it is to retain 100% of your incremental export earnings, which is something very beneficial. I think it's one thing that necessitated that move from ZSE. Yes. And if you read through the financials, you then see it in terms of the exchange monetary losses or gains. It yes. had a really significant impact on Bindura compared to the previous year. So yes, I would say it's somewhat within the range. Of course, you might want to say, well, the prices went up way more than the increase in revenue. But you then have to understand that nickel is not only sold in the spot market, it's also sold in the futures market. So meaning some of the transactions had been logged in way before that happened.
Yes, I think you just gave us an interesting point about production and prices. We saw Bindura said they went down 5% from their previous year production levels. And however, the top line is still up. I think, can you give us a general overview of what happens in the mining sector in terms of volume and the value, and then how that volume relates to the total revenues?
Okay, thank you. So one thing you have to understand about mining economics is that mines have a life. So each and every mine has a life. So if you are running a mining company, you need to, the price of whatever mineral that you're mining is a key determinant. So when prices go up, you need to go for the low grade. So it's high volume, low grade, so that you can be able to cover your costs, your production costs, everything in years where the prices are up, such that in hard times when prices really go down, you then go for the high grade. So the high grade is easier to mine, cheaper to mine. So you need to maintain that balance. So that's why you are seeing a shift in strategy from the low production, high quality to the high production, low quality in terms of their production. So you can see that volumes were down, sales volume were down about 14%, production 5%, like you said, but still their top line was up because the increase in price was enough to counter that. So it's a strategic decision by the company to move.
All right, thank you about that. And also we can, talking about the bottom line, they recorded a profit about 8 million, which is more than 300% judging from last year. And there is no dividend yet, so they didn't declare any dividend. And regarding investment, usually investments, Bindura price coming on the VFX was around 6 cents. Now it's down to 3.5, playing around that range. To those who invested, if the company is making profit, the nickel prices are up. So as an investor, someone would have logged in the money with Bindura. What do you think is the safest thing to do? Are you still holding? Are you expecting an increase in your equity, or maybe, as you highlighted about the life of a company, is it something you buy to hold your value, as you have, I would say, guaranteed returns?
Okay, so finance theory will tell you that there is really no difference whether a company pays dividend or
Yes.
not, because if it doesn't, it retains those as retained earnings, and it will be factored in the price of the company. But I don't think that's the case. I would have expected Bindura, if they had a bottom line of 8 million, 360% increase from last year, they should be at least in a position to give out some of that to their shareholders. And I would want to suspect that the decrease in price on the VFEX of BNC has something to do with that, because your decision on dividend signals to the market. So you remember when the nickel prices started going up,
Yes.
the share price of Bindura actually went up,
Yes.
and significantly then went down afterwards. So I don't think it's a good thing. Of course, they'll tell you that we want to reinvest capex about 6.5 million. But I would say, if you really believe in those projects as management, there are several ways to fund that.
Yes.
You can borrow. But at this point, be in a position to make the shareholders of company have a piece of the cake of whatever is happening. So I would have really appreciated a scenario where Bindura declares a dividend, so that its shareholders get something. But again, that's necessitated. If you then look at the shareholder analysis, you will realize that Kubimba Mining House owns more than 70% of that. So probably they're okay with that. But as minority shareholders of Bindura, would have appreciated the scenario where we get a piece of that.
I think you have highlighted quite an interesting point regarding we've talked about earlier about the nickel prices. You'd really want something to show that the nickel prices went up as a shareholder of Bindura. I think moving back to the whole exchange, the Victoria Falls exchange, we saw a headline in the past week saying about 4 new counters want to join the Victoria Falls exchange. We're seeing you can now have broker-controlled accounts with the exchange, and quite rumors about VFX direct, just like our CDC direct for
Retail.
yes, for retail investors. Do you think this will benefit these counters such as Bindura in terms of maybe pricing and having better market prices, or it will somewhat in a way just maintain the same volumes and bring to on the exchange?
Well, I would like to think that those are welcome moves, and certainly they will, to some extent, increase the participation on the exchange. So if you've been looking at the exchange, participation is quite increased from the last year figures. There's a little bit more activity now on the VFEX. So if more listings are then going to come, it's going to increase. And retail participation is also very crucial. It brings in liquidity, especially to do with price discovery, which is something which I also feel is lacking on the VFX at the moment. So I feel like it's a good move. It will increase liquidity, but also the institutional investors have to feel the need to invest on the VFX, because at the end of the day, those are the ones who bring in much of the activities. So the retail investors, they can come in their numbers, but their contribution to the total turnover, daily turnover, is way low compared to the institutional investors. So I think they have to make it attractive not only to the retail investors, but the institutionals as well.
I think that brings us to the end of our show. Thank you for watching. Please like, share, and subscribe. And let's meet again next week. Have a good day.